Good morning, everyone, and welcome to the GreatSoft Filing Season webinar. Today, we're getting ready for the 2025 filing season, which officially kicks off this coming Monday. So thanks, everyone, for taking the time to join us today. We really appreciate it, and we hope you find the session practical and worthwhile. So it's just after 9:05 now, so I think we can get going. So before we dive into the serious stuff, let's quickly go over some basic housekeeping for today's webinar. For those who've not met me yet, I'm Sandre, the Tax Product Manager here at GreatSoft, and I'll be your presenter for today's session. I'm joined by Zander from our support team and Dylan, one of our second line consultants, and they'll be keeping an eye on the chat and answering any questions that you might have as we go along. So just a quick heads up, today's session is being recorded and we will make the recording available after this session. If time allows at the end, we'll have a quick Q&A session. But in the meantime, please feel free to post any questions in the chat and either Dylan or Zander will respond as we go along. If we don't get to your question during the session, we'll try to get it at the end when we do our Q&A. Otherwise, we'll make sure to follow up after our session. Then for any general support queries, I know everyone knows this email. You can please reach out to our team at support@greatsoft.co.za. And then if you have any account-specific questions, please contact your account manager or you can email info@greatsoft.co.za. Right, then for today, the main resources we'll be using is the release notes that we sent out on the 4th of July, along with some small updates that were made afterwards. So remember those caveats I put in that said SARS made this change like a day or two before. We haven't gotten around to making that update on the system. So that has everything like that has been addressed now, and one or two few small things have been added, but we'll go through that and I'll explicitly tell you when new changes come in. And then we'll also work on the GreatSoft system so you can follow along with the exact changes that were made. Right, so let's get going. And first of all, I think the most important change or biggest change for this filing season is the resident versus non-resident change. And I think everyone has heard about it by now. So from the 2025 year of assessment onwards, if the person is a non-resident, so either they are a specific non-resident or they ceased residency in a prior year of assessment, the form will literally be a non-resident form, meaning mostly, and we'll go through it in detail a bit later, but it means that all your foreign income and foreign deduction fields have been removed from the form. It's only local questions on the form remaining. And then lastly, the change, and I guess the biggest change, is that if the taxpayer immigrated during the current year of assessment, both the resident and the non-resident form must be completed. But we'll go through that in detail also a bit later. Right, so as you guys can see, if you recall the release notes from the 4th of July, it is mostly the same. I just added a little, I guess, label at the front that says label, but it says other things down the line, just to show us what changed. So for most of the things, it was just label and wording changes, and SARS said it's just to make it easier for the taxpayer to understand the questions. So firstly, we'll navigate to our GreatSoft system and we'll open a normal return. And this one is just a normal resident return as we all know it. And then we'll go through our changes. So firstly, the tax practitioner question was changed. The unemployment for full year of assessment question, the wording was changed. And then this one I actually made a mistake. It's a new sub question. So if the taxpayer was unemployed and you say, yes, then you'll see it has quite different wording now. So previously, this was part of the unemployment for full year question, and the wording is now part of the sub question. Right, then the IRP5 wording changed, as did all of the sub IRP5 questions. So we're not going to go through each label change. It's going to be quite tedious. But then our foreign remuneration, so all of our foreign rem questions also changed. Just the label changes. And then a big change that was made is the partnership question that was usually part of our additional questions has now been moved to as part of our main questions. So now you can see it says here, and it also has a bit of a label change. It now says, is the taxpayer a partner in a business? And the sub question is, how many businesses is the taxpayer a partner in? And then more label changes. So the local CGT, foreign CGT, non-taxable income, medical expenses. So most of the wording on the word actually changed. Right, then we move on to investment income. And the change made on the investment income side is, firstly, it's a GreatSoft change. So we moved allowable interest expense incurred in the production of income received just below the local interest field so that you can see it's related to each other. So this is just a look change to make it easier for the person completing the return to understand what this expense is in relation to. Then foreign interest now also has an expense field. And again, we put it as just below the foreign interest and foreign credits so that you can see it's in relation to the foreign interest. Then the calculation was also changed. So previously I had a note that says SARS only recently made this change, so we were able to add the field and we updated the calculation, but we did not have enough time to correctly limit the calculation to only allow the income received amount. So, expenses are limited to income and we couldn't do that, but that has now been corrected and the calculation will limit the expense to the income received, the foreign income received, foreign interest income received to be specific. Then on the trust income now also has a married in community of property. Sorry, let me just get that for us. A married in community of property tick box to exclude any income that was received as not part of the communal estate. And then the calculation has been updated to correctly do the split for all passive income. So again, previously I said that this new tick box is very new. We had time to add the tick box and update the calculation. The calculation has not been updated. So now it will correctly do the split. And if it's not, if the tick box is ticked and it's excluded from the communal estate, it will not apply the 50% split. Right, then on the capital gain side, there was also a wording change, just a small one. Is the person connected to an RSA resident and not SA resident? Most of the SA things has changed to RSA. And then for local rental income, so for the 2025 year of assessment, the should variable ratios be applied for sharing of income or expenses has been brought back. So it's not in the 2024 year of assessment. In that year, it's still hidden, but in the 2025 year, it's visible and usable again. Then moving on to our business, trade or professional income, there's one new adjustment under allowable adjustments. So let's navigate to our business income, scroll down. And we'll see under adjustments allowable, we have a new residential unit, section 13, SCX. Right. And then also on the business, trade and professional income section, we again have this variable ratio field that can be used. So again, this is only applicable for 2025 going forward. On the 2024 return, it's still hidden and not usable. Right, then I had a few questions from our clients asking about the wording for the learnership allowance. So on the 2024 year of assessments, it will still say, but before 1 April 2024. But going forward from the 2025 year of assessment, that wording has been removed. And additionally, the learnership question that also said, does the taxpayer confirm that the registered learnership agreement was entered into before 1 April 2024 is also hidden. Again, it's still applicable for 2024, but from 2025, it's now hidden and doesn't need to be answered anymore. Then also a UDZ change that was made. This was the building or part of the building for which these allowances were claimed is now hidden. It will only be applicable again from 2030. So it's hidden from the 2025 year of assessment. Right, then on the non-taxable income section, there were 2 new codes added. Very small change. Then for local farming and local partnerships has this exactly the same change. We're only going to go through it once. This market value note has been hidden. So if we navigate to farming, we would have seen a note here at the top. From the 2025 year of assessment, it's hidden. And then we have 2 new fields. If we scroll down a little, under subtotal 1, we have plus livestock acquired otherwise than by purchase, for example, inheritance, and plus private livestock brought into farming stock. Those are the 2 new fields there. Then if we scroll a little bit more down, we have another new field, and it's less acquired otherwise than by purchase, for example, inheritance. And then additionally, we have 2 new capital improvement fields. So if you scroll down, we'll see we have this one as well as this one. And then similarly on our farming and farming partnerships, we again have our learnership wording change that removed the but before 1 April 2024 wording. Then for other deductions, we just removed this code and it's actually applicable only up until the 2011 year of assessment and earlier. So it's quite a long way back change that was made. Right, then if we move on to partnership details, we have this new note that says complete IT3 BO certificate information or details of partner where the IT3 BO certificate was not submitted. So that means we refer to this new question that says, was IT3 BO certificates for partnership submitted to SARS during the year of assessment? If we say yes, a new field will pop up that says, what's the unique number? We just add it and we move on with our lives. If we say no, then we have the normal partnership section that we've been completing. And based on the number, we will get our number of partners with the details that we can complete. Right, and the last change for partnerships was that it previously only allowed up until 99 partners to be added, but now you can add up until 150. Right. And that is all our resident changes. So I think, let me quickly see. if I can see any questions. I do see a question by Ishmael. I'll have to get back to you on that one, Ishmael. Sorry, I also am not sure about this new IT3BO, but I'll do some investigations and get back to everyone on that. Right, so let's move to our new, semi-new non-resident return. And for that one, we'll also go to a new return. And as everyone can see, it says non-resident at the top. And how did that happen? We ticked yes to that. Is the taxpayer a foreign national and not an RSA resident? Like I mentioned before, all the SA wording changed to RSA. Right, so we said yes, and now we have this non-resident form. And the biggest change on the non-resident form is this new, did the taxpayer receive any RSA sourced income? As you can see, if I untick it, you can see no further questions. If I tick no, no further questions will come up, and I'll submit this as a no return. If I say yes, we have our new, like I said, I want to say semi-new non-resident form, because it's exactly the resident one, excluding any foreign questions. Right, so let's quickly go through what those fields are that now been hidden, I would say. So it's the unemployment question. I have received this question before. Yes, the unemployment question was removed. I'm not sure why or how SARS will handle that, but it's been removed, so you will not see the unemployment question anymore. Then all the foreign income on RP5 question was removed, so you'll not see that under the RP5 section. And then, of course, we won't have our section 10.10 questions. That makes sense because it's all related to foreign income. Then our trust income question was also removed, as well as the other income or expenditure question was also removed, which means that for the non-resident return, it's just one big wizard. It's not a standard wizard with the additional wizard. It's just one wizard. So if you scroll down, you'll see everything is already open. We don't need to tick that other income or deductions received. Right. And then we also have our foreign income question, so we don't have that anymore. I mean, on top of our capital loss, there was also the foreign income question that's hidden, and under the capital gain, our foreign capital gain question was removed. And then, yes, that's the last thing on the wizard question that was removed, on the wizard section that was removed, sorry. Then if we navigate to investment income, we will see that we also only have our local income source codes. Again, it says RSA now, and we still have this option that says if you're physically absent, we'll say yes, and we'll still have that exemption. Right, for local farming, the trust field was removed because we can't tick our trust income question on the wizard anymore. We don't have income received from a trust on our local farming section anymore. And then also the statement of assets and liabilities no longer has the foreign assets or liabilities section. It's only RSA liabilities and RSA assets. Right, so that is that for our non-resident form. I think it's quite simple and straightforward. Actually, it's a lot better because we don't have to now unnecessarily complete any foreign income for a foreign national. That makes no difference on the return. So in that sense, it's definitely better. Let me see if there is any questions. Nothing from anyone. Right, and now we move on to what we call a hybrid return. So that is where the taxpayer sees residency in the current year of assessment, and we have both the resident and the non-resident form to complete. So I'm going to quickly show you how it looks on the GreatSoft side. We will again use a new return. So we're saying the taxpayer sees residency, yes, and we have a date within the current year of assessment. And you'll see at the top it says resident and non-resident form. And for the non-resident one, it only said non-resident. Right. So again, you'll see I already ticked did the taxpayer receive any RSA source income. This new non-resident form section will open. If I say no, that will be removed because technically when the taxpayer immigrated, they didn't receive any RSA sourced income, and we can just declare that non-resident form as a null assessment. So we're going to say yes, because we want to see how to navigate to the new form. Again, just to quickly go through it, this is our complete resident form, the first one. So again, we have our unemployment questions, and we have our additional that the tax receive on other income or incur other expenses question that opens up the rest of the questions on the wizard page. Now we navigate to our non-resident form. So we go there and we click on this button here and it will open our non-resident form. And as you can see, it opened it on top of the resident form. So you have to complete this one and then we're going to close it and then only you'll see the resident one again. So this is now exactly the non-resident form that we went through. We only have the one wizard, no question to tick so that we have the additional wizard questions, and it's only RSA sourced. Right, so the only thing on our non-resident form when we do a hybrid return, a hybrid form that we need to remember is that this is a return or a form on its own. So we're going to validate everything here. So all the issues on the non-resident one will only be visible if you have the non-resident form open and you click validate. Once you validate it, once everything is done and correct, we are going to say lock this return and allow the RSA resident return to be reviewed and submitted. So if that is not done, then you won't be able to complete and finalize your resident return. All right, I won't be able to do any of that now. If we validate, it's just going to say all of the questions is mandatory. I didn't complete anything. That's just for you to see that the validation on this, how the validation on this form works. Then we'll close it and it will load our resident return. And again, we'll have the validation to say we need to complete all of the questions. But additionally, it will say non-resident return, please lock the non-resident return to allow this ITR 12 to be reviewed and submitted. So the one thing we do need to remember is that we need to complete our non-resident return, validate it, and then finalize it. Then we close it, we come onto our resident one, and then we can move forward. So if everything on both forms is completed and filled in and validated, but our non-resident form is not finalized, then the only validation area you'll get on your resident form is this one. Okay, so the non-resident one also needs to be finalized. Right, so that is the changes for our hybrid return, and then one additional change is our residency section. Let's quickly navigate back to our normal resident return. So this residency status section will now be hidden for the 2025 year of assessment. And we did that because we get a lot of clients that get confused with that section and the use of that section. So that section did contradict the calculation. So you said in the wizard question that the taxpayer was a non-resident, and then in the residence information use section, you would tick that they are a resident, and then the calculation would calculate it as a resident instead of a non-resident. So that was previously used before these two questions came into effect. So before SARS added them to the return, now the return is based solely on these questions. So the residence information section is no longer needed. So that's hidden, so as to no longer confuse anyone. Right, and then the last thing is on our deceased estates. Let me quickly see if there's questions before I move to deceased estates. Right, so there's a question that says, were any individuals ceased residency in the 2025 year and they received trust income for the period they were a resident, are we able to include that info in the hybrid form? Yes, definitely. So on our hybrid form, we will see that on our resident one, this is our resident one, we still have the trust question here. The trust question is only removed on the non-resident form. So you'll definitely still be able to include any trust income they received while they were a resident. Oh, sorry, I'm reading in silence. So another question says, so if an RSA trust has a non-resident beneficiary we say insist they want to distribute to, we cannot include that on the return, even though on the trust return we cannot include any rewards to a non-resident. Yes, like I said, on the non-resident form, unfortunately, the trust question was removed, so that won't be able to be added. Right, let me just check the chat as well. No questions there. All right, then our last section that we quickly need to cover is our deceased estates. And on our deceased estates, there's three big changes. It's on the investment income side. So these new fields were added along with this note. That says in the case of multiple interest earning, complete the earliest and the latest interest earning date. So there's an interest from and an interest to date, as well as in the trust income section, there's also this interest from and interest to dates. And the last change was on the capital gains section, and it's this new tick box that says, is the transaction a deemed disposal? So just a quick note on that is that SARS first included that is a deemed disposal on the normal resident, non-resident returns, and then only later, just before our release on the 4th of July, they corrected themselves by saying it's only for deceased estates. So on the previous update and the current one that everyone is currently on, you'll still see this is the transaction a deemed disposal question when you have capital gains, but it's not applicable there. It's only applicable for deceased estates. Right, and that is my tune for today. And let me quickly see if there's any more questions. No, we covered everything. I'm going to give everyone half a minute to decide if they still want to ask a question. And if not, then we're going to conclude today's session. If you don't want to pop your questions in the chat, you're more than welcome to raise your hand and I can unmute you if you want to ask the question. Marian, right. Just give it a second. There we go. You can unmute Marian and go ahead with your question.
Hi, good morning. Thank you for the informative session. I have a question regarding the non-resident section where you say that the income from a trust has been removed. Is
Yes.
that only in GreatSoft or is it like that? Would it be on e-filing as well?
No, it's on e-filing as well. So it's the changes that SARS sent through. Yes.
Okay, thank you. I just needed to confirm that.
No problem.
Thank you.
Thanks, Marian. Anyone else with any questions? Last few seconds if you want to still get something in. Right, I think, let me just say that if you do have any questions, I'm sure most of you have my email address, or if you don't, just send it to support and they'll get it to me. So if you have any additional questions, if it's for support, if it's relating this webinar, please let us know. Otherwise, good luck with filing season. There's one more question. Wait. Yes, go ahead. Sorry, it says Morandini on my side. So you can go ahead and speak. Unmuted you. Okay, maybe it was just a wrong hand up there. Chantal, give me 2 seconds to unmute you.
Sorry, it's not actually a question. There's just quite a bit in the chat. If you just want to go through the chat again quickly, there's quite a bit in the chat.
Sorry.
No problem. Thank you.
Okay. Okay, so I can quickly do that. I can populate the resident and the non-resident form for us to see how it works. I'm just going to do a very basic return. Let's use investment income. And then we'll navigate to our non-resident form. And on this side, we're also just going to have investment income. Right, so let's quickly just make a mistake. And we can validate. And it will say this question is mandatory. And we will just answer this question. We'll validate again. No more issues. Let's quickly do this as well. If we do try to finalize before everything has been validated, it won't allow you to do that. All right, so even if you do try to use the lock button, they won't, the system will not allow you. So let's correct this. I'm going to validate again, and we are going to save this, lock this return, sorry. Now you'll see it's locked. We can unlock it again using this button. We can close. We can save on this one, validate, go to our tax calculation. It's just consolidating the two forms and our calculations for us. And then we can finalize. So it hasn't been retrieved from e-filing. That's our only issue. But now we can finalize. Let's just quickly do it by not finalizing this return. I just want to show you guys just real quickly. So we unfinalized. If we want to go to finalize this return now, it will give us that error that says non-resident return, please lock. So I hope that helps to show everyone how it goes. Then there's another question. Do you perhaps know when the 2025 company ITR for returns are going to be available? Unfortunately, no, we haven't received any information yet. I'm sure as soon as filing season officially starts on Monday, we might get it. And I will share that information with everyone so that you guys will know what the changes are and when it will go live so that you guys can prepare. And then I want to find out about how to report the cryptocurrency reporting. Sorry, Isabel, that is not something that I know, but I can check for you and I will give some feedback if I can find an answer for you. Then will we get the PDF document with the changes as shown in the webinar? Yes, I will share this with you along with the recording. And then can you please confirm when the filing season dates for trusts is? I've seen conflicting information. So as far as I know, it's somewhere in September. But let me also put that in the mail when I send you guys everything. Just to confirm. And then, so do we not need to disclose the income from a trust on a non-resident like interest and rental portion of the local trust? Would just show this under the other sections like interest and other income. Yes, I assume you'd have to be a little bit creative on the non-resident form if there is any sort of trust income that was received, as there is no specific place for that. And then the last question that I can see on the Q&A, I'll move over to the chat now. Will there be another update for GS before 21st of July? Yes, there will. It will be over this weekend, this coming weekend. We'll be sending out the email today. So there's a few small additional changes. I'll add the release notes as usual, as per our normal release mailer. You'll get the release notes with everything, all the changes. So today's release notes, filing season release notes, is all the changes that we made after the 4th of July release, plus the 4th of July's release notes. So it's the full filing season changes. And then the release notes in today's mail will just be the changes we made after the release on the 4th. Right, let me just quickly see on the chat if there's any more messages. Okay, will the recording be sent on to those registered? Yes, the recording will be sent to everyone that registered. And then, is the list of changes available on the GS website? No, it's not available on the website, but I will share with everyone that joined. I'll share the changes. For all changes we implement before Monday, we'll be able to submit on Monday. Yes, 100%. I know currently if you guys have tried to retrieve, it says wait until filing season starts on the 21st of July. That message will disappear from Monday. You'll be able to request and you'll be able to submit with all the new changes. And then, do you have to lock all the returns before finalizing? Yes, like I showed you guys, you have to first lock the non-resident form on the hybrid return before you can finalize. That says, it sounds like people don't know about the changes to Section 25B. People must remember that trust income distributed to non-residents from 2025 is taxed in the trust return and not the beneficiary. Thank you very much for that clarification, Alma. So that answers all of those questions about where to complete the trust distributions for a non-resident. That's why it's no longer necessary to have the info in the individual's return. Then again, yes, we'll get the release notes. And you can do your bulk requests on Monday. Yes, you can start your bulk requests on Monday. Right, so that is exactly the time for our session and all our questions answered. There is one or two that I didn't get to. I'll make sure to get back to those people who didn't get a response. And then thanks everyone for your participation and listening to me. I know it's always fun. So have a lovely day further and good luck with filing season. And please let us know if there's any issues or queries. Thanks everyone.